afternoon and good evening. Welcome to Traders Workshop. I'm your host, Tom Schneider with NinjaTrader, and really excited to bring back on our first guest that we had back in May, Patrick Mullen. But before we do that, I just want to go through some housekeeping. I just want to remind everybody that futures and options trading contains substantial risk and is not for everybody. You could lose more or even all you could use all or more than all of your initial investment. We recommend you use risk capital. What is risk capital? It's money that you can afford to lose. It's money that doesn't keep you up at night if you do lose it. It keeps you comfortable. It doesn't extend your retirement horizon. I do want to remind everybody that past performance is not necessarily indicative of future results, and we'll be talking about some concepts. They should not be taken as trade recommendations or financial advice, but rather as we use them for educational purposes only. So with that bit out of the way, I really would very happy to welcome Patrick Mullen from Gorilla Futures. How you doing, Patrick?
Hey, how's it going, Tom? Excited to be back and kind of knock another one of these trader workshops out. So pretty excited to get things rocking and rolling here.
Yeah, no, this is great. Happy to have you back. You did a great show with Jim in our inaugural edition back in May, and it was just, we got such positive reviews and positive feedback, and there's so much more to talk about. But to remind everybody, let's talk about where are you calling in from? Where are you dialing in from?
So right now I am from Central Ohio, pretty much Columbus. I personally have been trading for about 11 years now. Just kind of a little background, how I kind of got into the whole futures realm of things. For those of you who haven't seen that last webinar, maybe we can throw a link up there or something. I originally got into trading penny stocks, just kind of like everyone else, trying to take advantage of those moves. From penny stocks, kind of migrated onto Forex. A big fan of Forex. I still play around with it every now and then today, but it's not something that I kind of live off of, to say. Traded mainly swing style trading, looking at kind of the 4-hour, the daily, the weekly charts to take advantage of those kind of bigger moves. Because like we're going to talk about today, I'm a big fan of price action. So from there, I kind of migrated on to futures, mainly because I wanted something intraday. Didn't want to have to deal with kind of waking up at 2, 3 o'clock in the morning, checking the news, to kind of figure out what's going on. Got to get my beauty sleep. But no, so from there, switched to futures, and pretty much have been trading the ES since then. Traded NASDAQ, traded crude, gold, things like that. But I always seem to kind of find my way back to the ES and the MES. So big fan of the ES and MES. And we're actually going to be kind of using the ES and MES for the majority of our examples and stuff we go through today.
That's great. Patrick, you mentioned different asset classes, and, that's one thing Jim and I talk about, which is on our daily shows, which is the benefits of futures is you can pretty much trade any asset class, right? I mean, everything's represented in the futures market. And so you said you mainly look at E-mini, micro E-mini, S&P, but you do look at other asset classes. And just, curiosity's sake, what brings you to a different asset class when you do want to trade that?
So normally what it boils down to when I'm trading another asset class is the ES or the MES has been flat for a few days. There's no kind of specific rule or whatever when I switch, but when the ES is stuck in kind of a tight 10 to 20 point range for maybe a few days, that's when maybe I'll branch out, look at trading the NASDAQ a little bit, the NQs, maybe throw a little crude in there as well. But I'd say probably 98% of my trading is done on the ES. As long as we're kind of outside that 15-point range, that's kind of where I draw the line. And I'd stick with the ES other than that. But that's kind of how I kind of navigate that. And I'm not sure if we can switch over to my charts real quick. Another way that I kind of keep an eye on what's going on is I keep an eye on this market analyzer. Excuse me, this is my second one of these today, so I'm going to be losing my voice as we go, so apologize in advance. But I'm a big fan of volume. If I notice kind of our NASDAQs are maybe outpacing our ES, I'll kind of switch on to that, and I kind of pair up this volume, and we'll talk about this a little bit later on, but I also pair up this volume with price action as well. So that's kind of how I kind of navigate our markets or asset classes, as you said before.
So Patrick, looking at the volume helps you determine where there might be opportunity in another market. You have that market analyzer up. Looks like something that you've set up and you really don't pivot away from, and you get to know what volumes on which instruments are maybe normal or below average, you might say, or above average, and you can switch over there.
So just to kind of hit on that just a little bit more. So this one, first of all, I believe this is just standard in NinjaTrader. If you have any questions about setting this up, you're more than welcome to reach out. I'll help you set that up. But I would classify today as kind of a lower volume day. So I use this for kind of a few different ways. One, let's say our S&P products volume's real low, but NASDAQ and Russell have tons of volume. So maybe I transfer over to that, because if we don't have any volume, then I'm going to have a hard time getting my transactions in. There's probably not a lot of auctioning going on, so I'm going to switch to where there's volume. Second thing that I use this, and you can kind of see I have this highlighted over here in the red. I use this to look at gaps up and gaps down. So say our ES and NASDAQ opened up relatively close to our close of yesterday. Russell maybe gap down 1% or 2%. Maybe I'll try to fade that gap and take advantage of that as well. So I use it for a few different items. I kind of got it set up. I'm a very visual person, so I kind of have it set up with our net change and net points when we're positive or negative to turn green. Also, it's real easy to kind of look at this and say, hey, everyone's in the red right now. Might be smart to look at some shorts rather than trying to just catch a bottom here when we're down like this. So another way I kind of look at that market analyzer.
Great. That's awesome. Should we get right into the charts? You have an interesting chart behind you. Can you explain? I think the topic today is price action, and if you can give it, what you would call price action, and visually it looks like you're defining it, but can you just put it in words? Yeah.
So we're going to hit on kind of some trends here in a moment, but what I would call price action is just simply how price moves from A to B. And my style of trading is I'm never going to catch the entire move between A to B. You get lucky every now and then, but normally you don't get that whole move. I want that middle part. So I'm looking at market structure and things like that, but simply kind of back to what price action is, just how we move there. It's the kind of the movement we see in between A and B. And then we look at a few different other items that we're going to touch on here in a moment on how we can kind of capture those moves and get that chunk and then wait for it to happen again. So that's kind of my definition of price action. I'm sure everyone kind of has a different view or everyone explains it differently, but I like to keep it as simple as possible. And it's simply how price moves from A to B and kind of the little movement we see in between. So we're just going to dive right in, and to kind of give you a rundown of what we're going to look at. Well, first, we're going to go over basic price action, kind of what it is, how to use it, and set a solid foundation. So some of you that might already know how to use price action, hopefully this is a good refresher. If you're new to price action, hopefully you can learn a few things. From there, we're going to kind of dive a little bit deeper into market structure, signals, and things like that that kind of help or are created by price action. And then we're going to look at some indicators, filters, and things like that, and then kind of put it all together towards the end. So I do have the chat up here on the screen, and also NinjaTrader will kind of alert us if we have any questions. So if you have any questions as we go, you're more than welcome to kind of throw them in there. So first thing I want to do is just understand bullish and bearish trends that are kind of affected by price action. So what you can see here is I do have a weekly chart up. This is our ES. This is the 0922 contract. And what we can see up top is a bearish trend. I like to label a bearish trend when we have a lower high and a lower low pretty close to each other, or they happen kind of consecutively one after the other. So what we can see here is a bearish trend is simply a lower high and a lower low. Now, what we like to do is see multiple lower lows and lower highs so we can hopefully exploit that trend in our favor. So price moves down, we create a new lower low. We come back up, that's a lower high. And hopefully, like I said, we get that move down, kind of that stair step pattern that we see lots of people talking about. Now, unfortunately, we don't see this exact pattern all the time. We get something close to it, and we're going to talk about that here in just a moment. But first, we need to look at kind of our basic bullish trend. So a bullish trend is just pretty much that bearish trend flipped about 180. Instead of looking for lower lows, we're looking for higher lows. Higher lows, and then higher highs. And then we get another higher low and higher high, higher low, and so on and so forth. And hopefully that continues so we can take advantage of the trend. We've all heard the old saying, the trend is your friend, things like that. It's still applicable in these circumstances. And that's basically what price action is. So really the first kind of key concept I would say to price action is being able to define it. So what I want to do here is, this is our weekly chart, and all we're going to do is just hit on some of these basics real quick. Again, this is going to be a refresher. I'm sure some of you know how to do this, but we want to make sure we have a solid foundation because each topic is simply going to build upon the last topic. So if we don't understand the basics, then the more kind of advanced topics we're going to talk about here in a few moments might not make sense. So looking at our weekly chart, and I do this once a week for our members for our weekly analysis, is what we can see here is, obviously, back in January, we set a new higher high. We set a new all-time high. Let's just call that 48.10. So what we can do here is, let me get there we go. We're going to label this HH. So to keep things simple, HH represents higher low, lower low is LL, so on and so forth. So what we can see here is, after we got this higher high, we ended up getting a lower low. Notice our previous lower low going back to October, let's just call that October 1st, right around that 42.50 mark. So that first lower low should have been your first indication that we could potentially see a bearish trend. Because remember, in our example over here, we want to see a lower low and a lower high. It doesn't matter which order they come in, but ideally we want to see those two items before we kind of switch. That's what we call a turning point. So from this lower low, we came back up here and got a lower high. I don't think anyone can argue that this lower high right here is lower than that previous higher high. So now we can say, hey, I got a lower low and a lower high in here. I might want to start taking a look at some shorts. Well, you get a nice 2 candle there. We come down, we get another lower low right here. Well, after that, we get another lower high. Let me label this for you real quick. And when we're talking about these lower lows and lower highs, we're talking about kind of that general zone. Rarely, when we're looking at price action and targets, do things go exactly to that tick and then reverse. So in this situation, technically we did breach that lower high a little bit, but I would say on average, the majority of the price action, the majority of the auctioning phase that we saw going on right around April 1st was within that lower high limit. And this is a double top, or what I like to call a rejection pattern. We're going to talk more about that once we kind of get past the basics. So from there, you can see we get another lower low, a lower high, a lower low, and now we're looking to see, are we going to get a lower high around here? If we get another lower high, that could potentially be a ideal opportunity or an ideal area to potentially get short if it fits your rules and systems. Now, for a bullish trend, it's simply the same thing, but flipped. We're looking for higher lows and higher highs. Unfortunately, we don't have a recent bullish trend on our weekly chart to go over, so we're going to stick with our bearish trend example and kind of focus on that going forward so we can kind of be applicable to today's climate. So I'm just looking here at the chart or some of the chat. What time frame do you use to trade and how many bars are needed to define a reversal from a higher high and a lower low? Thanks. So to hit on that real quick before we move forward, you can have as many bars as you want. I don't think the number of bars defines the price action. I think the price action kind of defines itself. And to highlight on that is This right here is what I consider a 3-point turn. We go over this in our course. We go over this in all of our videos. 3-point turn with a rejection pattern. I would look at that as a reversal. Okay, we're at a level, a previous support and resistance level. We get a signal. We have our trend established, and then we can look to jump in. So I wouldn't focus on how many candles represent a reversal or a rejection, because we could see 30, 40 candles in one. And that's why we kind of look at our higher time frame, such as our weekly chart, because if we looked at our daily chart, we can go look at that real quick. Let's see, what was that date? April 1st. So if we kind of come back up here, let's see, April. So it's going to be this area right in here. Notice how this does look kind of bullish right here, you know, kind of choppy-ish, you know, we've kind of been going back and forth, and then we move down. Well, if you glance at your weekly chart, it clearly moved to the upside, we reject high prices, and then we move down. So that's why I wouldn't focus on how many candles make up that reversal or signal or things like that. I'd really focus on the market structure itself. And if you can't determine what the market structure is, you have a few ways to deal with that. And I don't want to get too kind of off track here, but what you can do is you can simply zoom out. So if your daily chart doesn't make sense, you can zoom out as much as you want. If you're still not seeing what you want to see, you're still not really able to identify those turning points or those rejection areas or those higher lows and things like that, simply move your time frame up until you get a good understanding. That's what we kind of call top-down analysis. You know, then we can apply that to our different levels and things like that, different daily charts or different time frames, I should say, excuse me. So I hope that does make sense. If it doesn't, you're more than welcome to throw another question in there, and we're kind of hit on that. So now we know the basics of kind of our higher highs, higher lows, lower lows, and lower highs. Next, what we need to kind of focus on, and we're going to do this rather quickly, is support and resistance. Kind of to keep things in layman's terms, the way that I like to look at support and resistance is, imagine wherever you're sitting right now. I'm assuming you're sitting down, maybe you're walking, same concept, but the floor you're sitting or standing on is your support. Okay, now imagine we didn't have gravity or whatever. That resistance is whatever the ceiling you're in right now. So right now I'm in my office. The resistance is the ceiling. It's making sure I don't fly out of this room. Now in a bullish trend, it'd just be like going up your apartment building. You know, we turn that old resistance into new support because now we're standing on our previous ceiling. Same thing if we're going downstairs in an apartment building. The floor we're standing on right now becomes our resistance. And that's what we want to see in a bearish trend, and then vice versa in a bullish trend. So that's kind of the easy way to look at support and resistance. And I think it's pretty easy to kind of remember that because we're always sitting or standing on something.
So Patrick, just to jump in real quick, what looking at the chart that you have here and you know, hearing about support and resistance, you're identifying areas that in a trend don't necessarily mean we're finding the absolute support of the entire trend or the absolute resistance of the entire trend, but that there are levels of support and resistance that we want to identify as we go through the trend, most likely based on previous areas of support and resistance, previous congestion, as I like to call it. Yep. You can use that to your advantage in the current trend because we don't know where the bottom is. We don't know where the top is.
100%. So to kind of highlight on that, and Tom brought us to our next point, is this is our current price action right now. This is what's happening right today. This is our past week or so. And we're going to talk about this in just a second, but I want to kind of set you up for this example. So what we can see is after that April move, we got a decent sized sell-off. We came all the way down here to, let's just call it 3,800 to keep it simple. From 3,800, we kind of set this double bottom right around 3,900. We came back up here. This would be considered a lower high right here. We got that lower high, and then we moved back down and we breached that previous lower low. So going back to Tom's point here, we had previous support right here. You know, we rejected lower prices. This is a double bottom. So meaning, hey, price isn't going down anymore. We could potentially look for longs. Now once we broke that previous support, we can say we potentially have support in the mid to low 3600s. Price pulled back right around that 3900 area. Excuse me. So if we look to our left, you can see previous support now is turning into current resistance, kind of like what I just said about going downstairs in an apartment building. Our old ceiling, our old floor is now our new ceiling, and we can make a case for potentially taking shorts back down to a support level. So that's essentially what we're trying to do throughout the day. Now, regardless if you're kind of like me, I call myself an intraday scalper. I look for these exact moves, but on a smaller time frame. Or maybe you're a swing trader, And again, hypothetical here. Maybe you're looking at getting short here. We've got a nice 3-point turn, previous support holding as current resistance. This could potentially be an area to get short from if it fits your rules. And that's all support and resistance is. That's all price action. And this is pretty much what we look to do on a daily basis. So does that answer your question, Tom?
Yeah, I think so.
Perfect. Let's see, any other? Nope. Okay, so what we can see here is we have our 3-point turn at a previous support and resistance level. So we've got that down. Now what we're going to do is we're going to slowly work our way down time frame wise, because we want to make sure that what we're learning on our weekly chart is still applicable to our lower time frame charts. I trade a 4,500 tick. I trade a 1,000 tick, 2,500 tick chart. I'm a big tick chart fan.
Patrick, just so we define those, when Patrick talks about tick charts, what he's talking about is rather than defining the candle by time, saying every 5 minutes we start a new candle, every 10 minutes we start a new candle, whatever our time period is that I like to use, Patrick's using number of ticks to define the candle. So after every 1,000 ticks, every 4,500 ticks, whatever the number is, a new candle starts. And time is just a measure. It's not a defining factor of the bar.
Exactly. And to expand on that a little bit, so a tick chart is basically representative of transactions. So you could essentially say that, hey, let's just run to this 4,500 tick chart real quick. What you can say is each one of these bars on here, there's been 4,500 transactions. And I talked to Jim about this. I did just post a link in the chat for our previous NinjaTrader webinar on tick charts. Is time doesn't necessarily move price. Price is auctioned off. Those of you that use market profile, volume profile, might be a little more, you might understand that auctioning phase a little bit more, but essentially I can have a 10-minute chart and price moves 700 points, How do I know when to get in? Because it's all intra-bar. Well, if I look at a tick chart or a tick-based chart, I can start to see those transactions, and then we ideally base those transactions with our support resistance, our price action, our signals and things like that, and then hopefully we can get into that move and kind of exploit that move. So hopefully that makes sense when it comes to tick charts and things like that. So what I want to do here as we work our way down to kind of our intraday time frame is want to take a look at our hourly chart. So remember, our support and resistance, our price action, higher lows, lower lows, things like that are all applicable to all time frames. So it doesn't matter if you're trading a 1-minute chart, a 5-second chart, price action at the end of the day is always going to be price action. Now it might look a little different depending on what time frame you're on, but price action is price action regardless. You can look at a Renko chart, you can look at a Fibonacci chart. It doesn't matter. Price action is price action. So if we want to kind of just do a little analysis, and this is what I did this morning with our members, we can start to see we have resistance forming right around, let's just call this 39.50 to keep things simple. 39.50 is one, our previous high of yesterday. Two, it is our current high of the day, right around that 39.50, and it's our current resistance level. So what we can say to ourselves right now is, all right, we have a resistance level. We have a double top, which is a rejection pattern. Now we can look to potentially get short. So if we zoom in a bit, what we can start to see here is, all right, price action has signaled us in to say, hey, we've got a double top, price could move to the downside. What we see here is a nice 2 candle setup, and then we can potentially look to get short. Now, we're never going to have 100% of the puzzle. And I talked about this in the tick chart webinar, where we want to stack the deck. So what I essentially just did there was stack the deck with the information that we know. And when I say stack the deck, all I mean is I'm putting things in my favor. So in this case, we can say we're back at a previous resistance level. We have a rejection pattern, which means a double top. So we got 2 things in our favor. 3 would be this nice, strong 2 candle setup we got this morning. And then we can say, all right, we have 3 things, and we closed under our 21 EMA. So 4 things, our indicators in line with what we're looking at. We could potentially look to go short. And that's what we look to do pretty much all day long, regardless of what time frame you are. We put our price action in use. We find some sort of indicator or filter. I like the word filter more than indicator. I think indicator is a little misleading, but that's a whole nother conversation for a whole nother day. We put our filter in, and then essentially at the end of the day, it is up to see if it works out. We put in our analysis, and then hopefully price action takes over. So let's see. So does the tick chart allow when the whales are in play? I'm talking about D. Hudson, talking about whales. I'm assuming when you say whales, you're talking about one, it could be kind of other time frame players, meaning swing traders, things like that. Or when you say whales, you're talking about banks, investment groups, brokerages, anyone looking, anyone that's a big time player. I wouldn't say price action alone is going to tell you where the whales are. You might want to look at maybe a volume profile. You might want to look at volume itself to see where that is kind of being, where all that volume's coming from, because these bigger players, like you said, investment groups, normally aren't going to just dump in all at once. One, most likely they would then control the market. And they'd have a hard time completing the rest of their transactions, or they wouldn't get filled at the price they want to. So that's kind of where we start to see volume pick up. And then we kind of can compare that volume with our price action. So just to kind of go down a rabbit hole here for a second, this is a 4,500 tick volume profile chart. And this is the MES. So what we can see here is we're starting to get a lot of volume up here where our previous day's high is, and we pretty much shot up and ran right up here. Let's see, yeah, right chart. We pretty much shot up right here. We get our lower high with a 3-point turn, previous resistance area, and then you can start to take advantage. And maybe there are whales there. I think it's one of those things where lots of people look to try to figure out what these bigger time frame players, these bigger investment groups are doing, when in reality, me and you are considered retail traders, and the goal is to essentially ride their coattails. We're not going to get in when they get in most of the time. And like I said, kind of about going from A to B, we just want a little chunk of that move. Let them move the market, let them kind of determine trends and things like that. We just want to look to grab a little chunk of the pie, get out, and wait till they do it again. So I hope that answers your question on kind of investment groups and trying to get in like that. I think price action could help you out, but I don't think it would be the end all be all to that answer. So I hope that makes sense. So back to our 60-minute chart, and then we're going to go and take a look at our 4,500 tick chart as we got about 15 or so minutes left here today. So what we can see is obviously we had those 4 items in our favor: resistance, double top, signal, indicator, or filter, and then we could look to go look to go short. Now, this is a little bit of a different topic for a different day, but we can use price action to potentially identify where we want to get out at. So what we can say here is, all right, this right here was technically a higher high in regards to this move right here. We ran into resistance, and our previous major resistance was around 38.20. We had price move up. This might have been a Fed day. Yeah, the 15th, I believe it was. Notice all the wicks. We had price move up, create a higher high, and then we move back down. What we can now say is, and this is all speculative, is price could come back down into the low 3800s, turn that old resistance into new support, and then we could maybe see price move up. So that's how you can possibly identify, one, when to enter and when to get out. Simply use price action to identify these levels of support and resistance. You can call them hot points, you can call them whatever you want to, but except magnets, don't call them magnets. You can look to potentially get out around these support and resistance levels and use price action to kind of facilitate the trade. So let's go ahead and move on to the 4,500 tick. Let's see, do we have any other questions? What is your color on, I'm not sure the answer to that one. What is your color on Ethereum and Bitcoin? What are the horizontal lines? The horizontal lines, I'm assuming you're talking about these ones in here. These are all simply the open, high, low, close indicator. It comes with NinjaTrader. Right-click your chart, indicators, go down to open, high, low, close. The labels do not come with NinjaTrader. The labels are something from Gorilla Futures. So I hope that answers your question.
And so, Patrick, just to expound on that a little bit, we always talk about the previous or prior days open, high, low, close study as it being important to know. It's just more information to know where the market thought these levels were important yesterday. You can use them for support, resistance, targets, whatever you want to call them, not magnets, but they do come into play. You do see a lot of times, like even today, where the market might trade between the close and yesterday's low, for instance, and then European market comes in, knocks the market up or down or whatnot. But those previous days, I think it's something that should be looked at pretty extensively when you're trading. Previous days open, or not the open, high, low, close, I should say.
Yeah, and just to kind of expand on that a little bit, I'm glad you brought that up. Excuse me. You can see, kind of like Tom said, overnight electric trading hours wise, we were finding support around that low of yesterday. If we look to the left, we also found support there multiple times, one during the overnight session, and then you could even say two during the New York session yesterday as well. So what you can say is, all right, hey, 38.90, if signaled in, could potentially be an area to get long from. Obviously, that didn't work out. We just went to the downside. We're talking about that on the 4,500 tick. But if you use that same kind of idea and analogy to our high of yesterday, it worked out. We ran into resistance, we hit that high almost to the T, and then we had a big sell-off. So the open, high, low closes, I think, are huge. I'd also pay attention to, some people call it the opening range, the first hour of the day. We can see lots of time, we kind of set the tone to say during that first hour of the day. And then we can kind of use the high of the first hour of the day and the low of the first hour of the day as potential support and resistance areas to look to get long or short off of as well. So I'm glad you brought that up. Thanks for bringing that up, Tom.
Sure.
So this is the 4,500 tick. This is where I like to place a lot of my trades. Like I said in the beginning, I also use 1,000 tick chart. So what we're going to do is we're going to kind of just walk through today's price action, kind of just show you kind of what was going on. So first of all, we opened up, we opened up right around this 39.21 area. From 39.21, we had a nice big run up to 39.50. When we hit 39.50, first of all, this was a higher high. So we can say, all right, price came up here and we hit a higher high, all right? Well, we also know if we zoom out a bit, that is also where we had resistance yesterday. So we're getting mixed signals right off the bat. Excuse me. So we've got that higher high. Now, what we simply need to do is sit back and let price action kind of potentially indicate what's going to happen. Okay, so we sit back, I don't see any strong signals right here. I personally am not a big breakout trader. I have kind of mixed views about breakouts. I think sometimes they're great. I think probably the majority of the time it's something I'm going to pass on. But our first potential indicator to say, hey, price might not be able to break this high of yesterday is right here at pretty much 10 o'clock. Now, we got a lower high right here. And let me zoom in because I want to make sure everyone can see what's going on. So we got our first lower high. That is one of our, you could say that's the first or second potentially bearish signal that we got. We ran into known resistance. Now our market structure is showing, hey, lower high. Also with that lower high, we get a 3-point turn, which is one of our go-to signals. We have our one up, one consolidate, one down. So right there alone, you can make a case to say resistance, rejection pattern, signal. You have 3 things in your favor right there. So some people are going to look to go short off of that. Now, also, we did get a news release, consumer confidence. I believe it missed by about 3 points, and we had a strong sell-off. So obviously, that would have been a great area to get short from. Now, what we can say here is we got a lower high. Now we come down here in regards to this move. And let me just see if I can throw in a little trend line, overall trend line to kind of help us out here. In regards to this move, this would be considered a lower low. So we're going to come down here. We can label this a lower low. And I'd also recommend to those of you who are maybe new to price action, new to trading, to identify these lower lows, lower highs, higher lows as you go. So your brain just automatically starts to see it. Hey, that's a lower low. So you don't have to label it all the time. But what we get here is we got a lower low. So we got our lower high and our lower low, and we can say bearish trend. So remember our bearish trend basics right here. So we're in our bearish trend. Now we need to look for an advantageous price to potentially get short from. There's many different ways you can do this. We're just going to kind of walk through one of these ways. And the first way is this lower high right here. So we have our lower high. We have our lower high. We have our lower low. And then we get another lower high. Well, once we get back here, we can look at a few things. I'm going to zoom in even further to make sure we can see this. First of all, we have our VWAP right here. We're closing under our VWAP. So our filter that I would say, our filter is showing movement to the downside. I would consider the VWAP and the 21 EMA both filters. We are under our 21 EMA. We did just create a lower high. Price is moving to the downside, so we have 4 or 5 things in our favor. Then we get a relatively strong signal here. This is what I would consider an engulfing 2-candle setup. We talk about it a lot in the course, engulfing 2-candle setup, and then we look to get short. Now, to the flip side of this is, where could you potentially get out of this trade simply by using price action? Well, if we get in right here, hypothetically around, let's just call that 21, we can look off to our left and see where our previous support and resistance is. So if we look off to our left, we can see yesterday going into the close, we had a lot of resistance right around 39.10. Well, pre-market and our overnight price action, excuse me, we are finding support right around 39.10. So we can say 39.10 has and is our current support level overall. So we would look to get in around 21, 22. We could potentially take a short down to 10, and that would net you about 11, 12 points, depending on where you got in with slippage and things like that. Now, just a little note here is, if you think price is going to move down to 39.10, I would probably be looking to get out around maybe 39.12, 39.11, because we never want to push it to the tick. When I set my my targets, excuse me, when I set my targets, I like to go off of the body of the candles. So I would be looking to get out around 39.14. So you're looking at anywhere between what, 8 to 9 point move right there on the ES, times that by 50. And that's a decent little return for how long would that trade have taken you? 10:16 to 10:30. So about 15 minutes or so, you could potentially have grabbed 7, 8, 9 points, depending on how much slippage and things like that you got hit with. Now, the other side to that is your risk, okay? So we always want to focus on risk, and we can use price action to kind of show us where our risk is as well. So what we can say here is we get in at 21. Well, if price keeps moving up, we could see price maybe move up to our high of yesterday, or maybe even all the way up here to this 39, let's just call that 39.30 level. Well, if I was going to take this trade, we have our signal. I'd simply set my stop loss up here at 27. So you're looking at a 5-point stop loss, with a potential 9 to 10 point return or take profit. So you're looking at pretty much a 1 to 2, and it's all based off of support resistance. If we move off to our left some more, what we can also say is, hey, that pretty much 39.30, you can even maybe call that 39.25 area, has held as resistance for you. Let's just call that a day and a half now. So what I'd also say, and these are all things I'm thinking as I'm getting into a trade, is if price gets up above that level, we could see a nice big run up. We have broken that resistance, and we could see price potentially move to the upside. So that's how we identify our support and resistance. That's how we identify our targets. And that's how we kind of use price action to not only get into trades, but also manage trades, because everyone should know that risk and things like that is really number one. If you're not protecting capital, you're not identifying where you want to get out and setting your stop losses, then all you're doing is essentially shooting yourself in the foot. So risk should be number one when it comes to trading.
So Patrick, just want to clarify something as well, which is, I think, something you mentioned, you pointed out, but I think it needs to be reintroduced or reinforced, which is, you've identified the paradigm with lower highs, lower lows. So you're going to trade in the direction of what you've identified, right? So when we're identified these lower lows and you say, okay, well, I've got this lower low, I'm going to look for a place to go short. It's going to be at this lower high. It's running up against VWAP. It's doing whatever the signals are. You're not trying to get every wave, right? You're not trying to say, okay, I'm going to get out and then I'm going to expect this to go the other way, so let's get in. You're trading with the bias based on the price action.
Yep. And to kind of highlight on that is, once you set that bias, I'm looking to get, again, a little chunk of that move, and then I'm waiting to see if it repeats itself, so kind of like down here, we could call this another lower high right here. You could look at that as a 3-point, even though we have 4 or so candles, and we look to get out at another support area, which would have been our low of yesterday. So I don't want to guess. I know there are multiple different ways you can do measured moves. You can do fibs to try to determine this long move. But my trading style, and kind of what I found lots of other kind of intraday traders are, we want to get in, we want to get out, and then we want to wait for that to happen again. And that's essentially what would have happened right around 11 a.m. Eastern this morning. We got another lower high. You can also call this a double top, 1, 2, lower high. We're still under that 21 EMA. We're still under our VWAP. We're significantly under it. And you can say, hey, I'm at a resistance level. Look off to our left again. We have known resistance around 39.10, right around here. And you can say, hey, I'm going to take that down to a previous support area, right around, let's just call that, 38.93. So you're looking at potentially 7-8 point move right there to the downside. And then you get out, you wait for it again. And we just look to do that multiple times throughout the day.
Awesome. Patrick, we're running up against time, right? Not resistance. We don't have support. We're running up against time. Always a pleasure. The time goes quick when you're here. Love to hear what you're talking about. Where can people find you, Patrick?
Yeah, so just a quick little rundown of kind of what we offer here. We do have 2 offerings. All of this is at gorillafutures.com. So we do have our price action course that comes with our daily analysis, 26 chapters, indicators, pretty much everything that you could think of that you need for price action. We also have our coaching package as well, which comes with the price action course and everything included in it. And then it comes with our additional one-on-one coaching sessions. From there, we are running a quick webinar sale for everyone watching today, where you get our course, our Discord channel, our streams, analysis, our journals. We also offer exclusive perks. NinjaTrader is one of them, not surprisingly. And we're offering that today for about $297. That is at gorillafutures.com/sale. Now, if you do have any questions, you're more than welcome to reach out to us. You can use our contact form at gorillafutures.com. And you're more than welcome to reach out to us via email, gorillafutures@gorillafutures.com. So as always, it is a pleasure to come on here and talk with you guys. I hope it's something that we can do here in the future because we got lots of other topics that I'd love to talk about as well.
Oh, I'm sure, Patrick. We'd love to have you on again. I just want to hit a real quick. We do these polls. I don't think we were doing polls when you were first here. So we drop a poll in the chat room. Poll results. Do you use tick charts? Topic that we were talking about earlier. Of course, 40% of you say of course. 33% say not yet, but would like to. So that's great. Certainly reviewing this video and reaching out to Patrick. I recommend that. And then they're not for me. About a quarter of you said that. And that looks like that's the end of the poll. So again, Patrick, thanks for coming. I want to thank everybody for participating in the chat and coming to view us. And we hope to see you next time on Traders Workshop. Thanks again, Patrick.
Hey, thanks again, guys. Enjoyed it. Talk to you soon.